Hello, everybody, and welcome into Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day. Before we dive in, standard disclaimer, nothing here is investment advice. Do your own due diligence. And today's guest is the CEO of Abitibi Metals, a Quebec-focused mineral acquisition and exploration company focused on the development of quality base and precious metals properties that are drill ready. It's Jon Deluce. Great to have you on the show.
Thanks for having me again.
Yeah, great to have you back. Last time I had you on the show, you said you thought we were still in the early stages of a gold bull market. Now, that was in October of last year when gold was around 2,700. Here we are, 3,300 and change. Is this still early days in your view? And what catalyst do you think could drive us higher?
Yeah, I think certainly we're definitely still early days. Like when we enter into these gold bull markets, they're usually around for about 5 to 10 years. And I think again, the factors we discussed in our last interview are still very prevalent as of today. At the end of the day, we are in a massive debt bubble. This debt bubble has been from an extended period of monetary debasement and mismanagement. So we are in a situation where banks across, or Federal Reserves, governments around the world have excess levels of debt. And the difference between now and the 70s and 80s, when they brought interest rates up as high as 18%, at that time, debt levels were much, much lower. If we brought interest rates even as high as 6 to 10%, there would be a lot of governments that couldn't cover the interest on government-based debt. So I think the difference that we have today is we are backed into a corner. But that corner that we're backed into, it leads to all these factors that are really provide strong tailwinds for gold. And what are we seeing in response to that? We are seeing record levels of gold buying from central banks around the world, especially the East. You look at Russia, you look at China, you look at the BRICS nations, you look at the fact that they've been on record wanting to put together a BRICS nation dollar to combat the US dollar. And how are they going to gain credibility of that? They are talking about backing it with gold, backing it with commodities. Because at the end of the day, there is a mistrust for fiat currency. We talked about that last time, and that's only accelerating even more so today. So I think there's rising geopolitical tensions. There's pressure on the Federal Reserve to cut interest rates. We've seen the Bank of Canada cut over the last year since peaking at just over 5%. So these are all very strong factors to support gold. We look at the last time we were in an inflationary environment in the 70s and 80s, and gold moved from $35 an ounce to 800. Now it's a bit different. The dollar was pegged to the $35 per ounce, and then that was unraveled. But again, like even taking it from a base of $200 an ounce, if you went to people at that time and said, "Do you think gold can make a 4x move?" Majority would probably say no. But I think that's kind of what we got to consider today is our gold to Dow ratio is still very low. The factors that we're in today with inflationary and let's face it, real inflation is still very high. It is not the 2 to 3% that's being printed. So again, these are all factors that showcase why gold is so important. Gold has been currency for thousands of years, and that's why Federal Reserves are buying it at record paces. Because at the end of the day, I don't know how this is going to play out, but in my opinion, this is leading to some type of reset, and gold and hard asset will push through no matter what turmoil that we see.
Yeah, an interesting comment about central bank buying. It's interesting, even here in Serbia, very recently, just a few days ago, the central bank here not only added to its gold reserves, it's got a lot of its gold stored in Switzerland, and it has now requested to stand for delivery for that gold to actually have it shipped into the nation of Serbia. So that's a pretty fascinating development. Very interesting to note that Canada still has zero stated gold reserves, which is kind of insane. I don't think that will necessarily go well for them. However, a lot of gold in the ground, as we're going to talk about. And that leads us to the gold mining sector. And you also thought last time we talked that it would eventually outperform gold. And here we are year to date. The GDX and especially the GDXJ has outperformed gold by a fairly significant amount. Are we witnessing the beginning of a bull cycle for the miners? And if so, how far do you think we could go here?
I think we're at the start of again a bull cycle for the miners. As I mentioned in the last topic, these gold bulls usually last 5 to 10 years. And I'd argue we're really in the perfect factors for a strong gold bull market. And I look at my portfolio in the producing space, and it's kind of been like junior miners over the last year and a half to 2 years. Like when we spoke, the producers were still trailing gold in October of last year. However, now we're seeing Agnico, we're seeing IAMGOLD, just to name a few examples. I look at my portfolio there, both are up over 150 to 200% over the last year and a half to 2 years. It's like a junior mining portfolio. So I think, but even looking at $3,300 gold, they are producing record levels of cash flow, not just in a mining sector basis, any sector basis. But again, the general money is still not there. Like I think Rick Rule often points to right now, the average exposure in the mining space is like 0.5%. Now, a revert to mean is like 1.5 to 2%, and oftentimes you'll overshoot on the other side of that. But even if we have 3 or 4 times the capital entered to the space, there's not a lot of names, quality names to go to. So I do think we're still early. We have record cash flows. Dividends are going to continue to increase. That's going to attract general sector money, especially because I see other sectors starting to tail off here. And I think the bubble and overinflated tech companies trading on insane multiples of earnings, I think people are going to get back to, okay, what are fundamental, strong cash flowing businesses? And that's where I see the mining sector starting to get more attention. As a general sector, not just because it's mining, just because you're producing such strong levels of cash flow in an overall market that is very unstable and there's a lot of uncertainty. So I think part of what I'm excited for in that overall thesis of where the miners are is the fact that the juniors and exploration companies really haven't moved that much. You have drill stories that are catching a bid and doing quite well, but overall this is still early. And that's what makes me think that the majors still have a ways to go because we haven't seen a lot of money come downstream. And miners have neglected exploration for such a long period of time. So what makes me excited in the smaller cap space and holding the major producing mining companies, I think there's still a lot of room to go in the majors. We're still not reflecting the earnings and forward-looking earnings that these companies have. Going downstream, the M&A is only just starting. Miners have been deploying capital under NDAs within juniors because they don't want to be seen as a first mover. But I think that's kind of like a coiled spring within the junior mining sector. We start to see more and more of these strategic investments come out, and we're going to have a lot of excitement enter into the space. So I'm excited overall with the majors, with the juniors, but I still think we're quite early.
Yeah, I agree with you. I think gold mining equities might be the most no-brainer play in the whole commodities sector right now, given how undervalued they are and the current setup for gold itself. I want to talk about silver as well. This is another metal that a lot of people are pointing to, particularly as it has broken above $39 a few times, seeming to be making higher lows as we advance, now at nearly $38. What do you make of silver's price action? And are we reaching that stage of a precious metals bull market that a lot of analysts talk about, where silver starts to outperform gold, which it has actually done so far to date here in 2025?
Yeah, we look at the silver to gold ratio still at 88 to 1. That's still well outside the average. Like the 30-year average is about 60, 55 to 65. So even on the reverting to a 30 to 100-year average, we still have a long ways to go. So I think I expected silver to move earlier. You can never time these things, but now we're seeing silver break above uh, key resistance levels. So could this continue? I think it will. We've been pushing all-time highs in gold for a while now. We're still under the all-time high in silver. And again, as you said, silver lags and then overshoots these markets. We look at in the 1980s, silver went as high as $50 at a time that gold was 800. That was at the peak gold price. The gold to silver ratio at that point was 15 to 1. If we were to get anywhere close to that level, the silver price would be up a lot higher levels than we are today. So I think also people are recognizing it once again for both its industrial and monetary demand. So I think lot of upside for silver. I think people are you're seeing 52-week highs in a lot of the silver miners and some of the developers. So I think it's a good sign for things to come in the silver space.
Copper also hitting all-time highs recently, now sitting at around $5.50, another metal you were very bullish on in our last conversation. How are you currently viewing the macro setup for copper?
I think in the short term, it's very hard to say. I think this is a reactionary spike on the back of the tariffs with Trump. That is a very hard thing to plan for. Could he come out in a week from now and say, okay, we're not actually going forward with that, and the copper price comes down 10%? Could very likely. We're seeing a lot of decisions that come and go very quickly within the U.S. administration. But besides that, there is very strong fundamentals for copper, combined with the supply deficit that we are entering into this year that is going to accelerate through to 2030. So short-term volatility, it's hard to predict, but medium-term supply-demand imbalances are clear at a time that there's increased global electrification, limited new supply. Like I think a lot of people think the cure to high prices is clearly increased supply. But at the end of the day, a new mine takes at least 7 to 10 years to come online. So it's not gonna, we get high prices, we can't just accelerate copper supply. But even more importantly, this is at a time that there's increased political instability, there's increased risk of nationalization, and increased risk of the limitation of exporting of copper out of countries that supply significant amounts of copper. I think, as might have mentioned last time, 50% of copper supply is in areas of political instability. We've seen that in 2023 to 2024 in Panama. The government nationalized what was a significant copper producer with one of the largest copper producers in the world. I think we could see more and more of that. I think that increases the importance and valuation of tier one jurisdictions, but also like being a Canadian-based company and Canadian citizen, I think it also puts a push on permitting and supporting domestic development opportunities because Canada, like every other nation, we're going to have an increased demand for copper. Where is that going to come from? We can be less and less reliant on trading partners. Look at our most trusted and long-serving U.S. trading partner we're now having issues with. Who would ever thought that would happen? So we have to continue to be more focused on domestic, and I think that fits well for the copper space, but also situated as a copper developer.
Yeah, that's a great segue into discussing Abitibi Metals and how you fit into the picture. It's been a while since I last had you on, as we mentioned, a lot of new viewers and subscribers since then. So could you start with an overview of the company and maybe some highlights on the progress you've made since our last discussion?
Yeah, no, certainly. I think maybe just a touch for some of your new viewers. I'm a member of a family office based out of Toronto, Ontario. We're diversified in the airline, real estate, and mining space, so we're not perma gold or commodity bulls. So we see this significant opportunity in the sector as we've mentioned and as we've been discussing. And we're focused on deploying more and more of our capital in the space over the next 5 to 10 years because of the opportunity that is here as of today. So as a result, we have over $4.5 million invested in Abitibi Metals. We lead by example. We bought over 4 million shares in the open market since our last discussion, putting over another $1 million of our capital in the company because at the end of the day, we saw that there's a disconnect in our market cap today compared to what we've been able to accomplish at B26 and really the valuation gap of where we see we should be in the marketplace. At the end of the day, markets are irrational. There's going to be periods of time where the market doesn't get it. And I think that we're at that point in time with Abitibi. So really what I can say to new followers, existing followers is we we are well aligned with our shareholders. We pride ourselves in a healthy G&A to exploration breakdown per year. I'd say we have one of the best in the business. being about 15 to 20% per year in G&A and over 80% in exploration. And I think launching into what has been a company making acquisition for us was B26. This is a polymetallic deposit located in the province of Quebec. This is an asset that we have optioned off the Quebec government. We now own 50% of the asset. That is we've earned into that since our last conversation. We did that well ahead of our schedule. We financed this very quickly. We met all of our obligations 3 years ahead of schedule. So we're very happy to have 50% of the asset as of today. But what is B26? B26 is a polymetallic deposit. 80% of our resource is copper gold, 20% is zinc silver. So we have the leverage of having both a precious metals and zinc copper exposure. This is a copper focused deposit with over 500 million pounds of copper in the deposit. But we also carry 370,000 ounces of gold. So to put this in perspective, and I guess tying into one of the developments since our last discussion, in November of last year, we published an updated resource. In 1 year, we were able to expand the resource by 63%. We increased the contained copper by 39%, and we increased the contained gold by 26%. So where we stand as of today is we have a combined 18.5 million ton deposit at 2.2% copper equivalent. That's broken down with 11.3 inferred and 7.2 million tons indicated, indicated 11.3, inferred 7.2. But what does that mean? On a gold basis in an Abitibi greenstone belt that is gold lead, this is a gold equivalent deposit of 2,050,000 ounces of gold at 3.5 grams, or just over 900 million pounds of copper. So this is in the top tier of size of potential development opportunities in the province. And we're already in the top 10% of FELSIC hosted VMS deposits worldwide in terms of tonnage. So again, tying back to what the disconnect in the market cap. We are trading at a market cap of $38 million. We have $18 million in cash, leaving us with an EV of $20 million for what is a gold equivalent resource of 2 million ounces. So that's where we see the disconnect. And we're very excited about some of the other changes that we've made since our last conversation. One of the, I think the important things for companies to do is reflect on what you did well and what you could improve on. And what we reflected on in the fourth quarter and going into the first quarter of this year is our phase 2 drill program was not delivered timely. As soon as you don't deliver drill results timely, the market thinks you're sitting on bad results. That wasn't the case. But as a result, we made changes to our technical team. Our technical team is now led by Louis Garipi. He was the VP of exploration at O3 Mining. He just went through a successful takeover by Agnico earlier in the year, and he has a very strong gold and VMS background. Combined with now a full-time operational team in Val-d'Or, Quebec, those are changes that I think you're going to see reflected in the quality of our drill program through the rest of the year. But anyways, I'll pause there for follow-up questions. But we've covered a lot since we last spoke, but we're very excited for the rest of the year.
Yeah, fantastic summary of the progress you've made. I want to go over some recent news items. And there's a lot. You guys are putting out news very regularly, which I think is excellent. Let's hone in on the conclusion of your phase 2 drill program at B26 and those results, and then walk us through the launch of your phase 3 program and how that's going so far.
Yeah, so the phase 2 drill program, we completed 16,500 meters. That was not included in the resource update. So that's resource upside that remains currently uncaptured. As I mentioned, we didn't deliver it as timely as we would have liked. The results of that were completed in the first quarter. We're very committed to tightening up that time frame going forward. But at the end of the day, we delivered very strong results. Touching on a few of the key accomplishments within that program, we extended the deposit about 150 meters deeper. That intercept was 2.4% over 17.5 meters within a lower grade envelope of 0.83 over 78. key takeaways from that is 2.4 is above resource grade that extends the system 150 meters deeper. But the key of importance is this is what limits the western plunge at the deposit. The lower grade 78-meter interval is very important to see that we're hitting that wide mineralized lens at depth. Because just like the first 300 meters vertical where we see grade variation, we could be very close to the next high grade 50-meter zone. But the fact that we're hitting that lower grade with almost 20 meters of higher grade material makes us very excited to add holes around that intercept on the western plunge. So that's one of the key objectives. The secondary objective that we did during phase two is we drilled and connected isolated lenses, but we also targeted widely spaced gaps in the drill grid that were under NSR and were under and not included in the resource. We targeted those areas. We proved that there was grade above 2%. Some of the intercepts that we hit within those areas were like 1.94% over 29 meters, 2.02 over 16.5. So again, resource building drilling within areas that were either isolated lenses or within areas of the block model that we thought were understated and we proved were understated, and as a result, those are areas of the block model that have been increased. So really, that is very strong conclusion to phase two. But now we're ramped right into phase three. So we've completed so far 2,500 meters of drilling within 2025. We announced those results last month. Again, these were targeting gaps within the block model because really our thesis is there is parallel high-grade lenses within this deposit. On the eastern side of the deposit, these are well defined because of the drill density. It's been better drilled on the east side. As a result, we have these high-grade continuous lenses. Why is that important? That is important for demonstrating that we have critical mass and there is a pathway to this being an economic deposit. Part of what we think the market could be missing in our valuation is, okay, we already have a large resource. This is a resource that could have a 10-year mine life at a 100,000 gold equivalent ounce production per year. But what are the costs on that? And that's the key third question that we're looking to address. And demonstrating how these high grade zones hang together is something that helps showcase a clear pathway to critical mass. So on the western side of the deposit, we drilled, for example, 2.13% copper equivalent over 11 meters. That was in an area of the resource that was prior stated at under 1% and under underground cutoff. So again, good drilling, but what's to come? We have 2 drills on site as of today. A third drill will be arriving likely next week. This will be drilling 17,500 meters between now and the end of the year. And what's important about that? This is the first large-scale expansional program in Abitibi's history since optioning B26. We are taking a very wide-scale approach on the deposit, testing a strike length over 2 kilometers, up with step-out holes up to 500 meters away. If we hit in step-outs up to 500 meters away, we believe we can show a clear pathway to critical mass. We can show a pathway to how this could be a 30 million ton plus deposit, how this could be similar to the Salve mine, which is 7 kilometers away, that had a 60 million ton resource that was in production for 20 years. We have a gravity anomaly on the eastern side of the deposit. One of the key questions that my technical team has is we have the copper gold stringer zone, we have the massive sulfide zinc silver that runs parallel, but could we hit a massive copper lens? We hit signs of that in phase one where we drill 11.5% copper equivalent over 10.6 meters. Could we hit a 30 plus meter zone of 10% plus copper equivalent? We think we have the potential to hit that. Could that come from the gravity anomaly? Could that come from drilling this at depth? Could we hit a new discovery parallel at depth? These are all unanswered questions that we're going to answer. But at the end of the day, this is only possible because this was developed by the government. If we had optioned this off of a major or junior, this would have been drilled off before we would have ever bought it. So very excited about this upcoming program, very high catalyst, and we are fully funded to deliver this program. and deliver our plans in 2026.
Great. Well, give us some more insight into your cash position. You've mentioned it a few times. Maybe dive a little bit deeper there in terms of how much of that cash will cover your work at B26. You said it would cover it into next year. And how do you plan to raise more capital moving forward after that?
So we have cash position of roughly $17.5 million as of today. That funds our remaining drilling for this year. It also funds another 25,000 meters of drilling next year. So we're still projected to start Q1 of 2027 with still around $2.5 to $3 million. So we have a lot of runway in our capital, and that's important because of the disconnect that we feel is in our valuation as of today. That capital gives us a runway to provide a better return on capital for our supportive shareholders that were there in our April round, in the prior rounds to that. And maybe just to touch on our April round, we did a bought deal with BMO. We are a very small company to have the BMO investment banking team involved with our story. I can't speak on their behalf, but I think that supports the opportunity that we have and really what's in store for the company. We raised money with what was large institutional funds that are here for future financings. And really, as I told them, and as I'm telling your followers, our shareholders, is this is a great value point, and we really want to prove ourselves. We've laid out, I think, a clear path with the drill bit, clear path with our capital, and now it's time, and we can be patient. We issued no warrants on the April financing. Once again, we have no convertibles overhanging on the stock. So now it's time to deliver with the drill bit, deliver with other corporate updates, and see us re-rate. We were the smallest company at the BMO conference in February. And really, the consistent message with some of the larger institutions is if they saw this story at 100 to 150 million market cap, they wouldn't think twice. We get it to that level, our distribution opportunities with shareholders and funds goes up significantly. So that's our focus: is how do we grow this company to 100 million market cap? That's our focus in the short term, because that's where we think that we should be and where it's going to open up our marketing opportunities to getting this out to some of the ETFs, some of the larger funds, and that's really what snowballs us into this growing into a much larger company that we think is justified. But where do we raise capital from? We have supportive banking partners. Our existing shareholders and funds put in initial starting positions. Multiple of them could easily write a $10 million check each. But it's up to us to prove ourselves, and we're very motivated to do that and continue to leverage Quebec critical flow through financings where we're able to raise capital at large premiums to market. But again, we're a ways from that. We need to really showcase and demonstrate to the market how undervalued we are, and we're confident that between our drill results, between the market conditions, we're going to enter a period that the market realizes how much value there is at B26.
Well, Jon, extraordinarily thorough breakdown. I do want to ask before I let you go, is there anything we haven't yet covered or anything you think it's important to emphasize to potential shareholders of Abitibi Metals?
Yeah, no, I think really the rareness of this opportunity, that there's a renewed focus with the majors to invest in copper gold opportunities in tier one jurisdictions. We really have one competitor in Canada, that's Foran. We can see over the last year, Agnico Eagle has taken a minimum, I think it's over 10% position in Foran as of today. Foran is going towards development, but really besides Foran, there's not a lot of 15 million ton plus, 2% plus copper focused deposits in Canada. The uniqueness we have compared to Foran is the high gold credit. You look at the Larone deposit that has been the company maker for Agnico on the Cadillac break, some of their highest grade zones were at depth. Can we unlock high grade zones at depth at B26? Certainly something that we think that there's a potential to have. So really, we're trading at a valuation that's currently under our last deal price. I think that's really helps highlight the opportunity. And really, we have a very high impact rest of the year. We have lots of drill results. We have potential corporate opportunities. And tying back to your last question, where could we see more capital come from? I think we could see it come from a producer. We've presented this project to a lot of the producers. there's interest there, but we need to execute that at the right time. So I think that's a potential catalyst. I think maybe one of the key messages is, whether it's your followers, whether it's our existing shareholders, is really our appreciation for their support. At the end of the day, there's thousands of juniors out there. Capital is still hard to come by. There's still not a lot of new funds entering the space left yet. So I definitely, my appreciation for their support, also their patience over the last 6 months as we made changes within the team, as we modeled out the deposit, but we're now ramping into a period of a lot of activity. So I do believe that patience and the investment in our people and in all the different stuff we've done behind the scenes will pay off over the next 6 months and over the next year and a half, which is once again fully funded. But in the meantime, we definitely appreciate all of our supporters over that period that we've really been able to. It hasn't been market reflecting developments, but we're confident that the investment that we've made is going to be reflected over the next 6 months.
Fantastic. Well, I will put a link in the description below to the Abitibi Metals website as well as social media for people who want to follow along with the company. Jon, it's been an extraordinarily enlightening conversation and greatly appreciate the update.
Thanks for having me.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.